Thank you very much, Sam. Good morning, everyone. Hopefully you can hear me clearly. As you've heard, I do chair the KEPSA Public Finance Sector Board. And I'm happy to be here today morning to have this discussion. Just to recognize Governor Nderito and James Moragori from the Institute of Public Finance, my colleague Steve Okoth from KEPSA as well. I think the discussion we'll have here will be, I guess, fairly wide-ranging in terms of those amendments that have come in and the impact that they have on business. But my comments that I'll make at this point in time will really be around the KEPSA experience in the lawmaking process. So just wanted to try and explain that, and unfortunately our guest, CPA Honorable Kimani Kuria, is not yet here because we also interface a lot with the parliamentary budget committee. So I think, as you are aware, just for those ones who are not aware of KEPSA, it's an umbrella body of the private sector for both local and foreign businesses, trade associations, chambers of commerce from various sectors of the economy, and really coming together to speak with one voice around when engaging government and other stakeholders on cross-cutting policy issues that affect private sector development. And really a lot of that focus is around the ease of doing business and competitiveness. Index is really, we believe that the ease of doing business, the competitiveness index of Kenya as an economy are really the areas that we will ensure businesses can then make contributions to a sustainable economic development of the country. Normally when we engage in the lawmaking process, we start pretty early in the year. So we have what are known as sector working groups, and I know that some of you might be in those sector working groups, and this will normally detail the private sector priorities. So you might find that in the oil sector, there are definitely certain priorities. Perhaps there, some of the priorities are things like refunds of VAT. You might find that in the agricultural sector, there are different priorities that have to do with the value chains, the competitiveness, which will be different from manufacturing, different from retail, and so forth. And we collate all these comments from these different sector working groups, and in terms of priority, and make sure that these are then forwarded to the National Treasury. It's actually unfortunate, James, that we don't have someone from the National Treasury around this, because when we have these conversations, I think it's important that we have the National Treasury here. We actually have business here, we have KRA here, and we have Parliament, because I think that's really the whole triangle, or shall I say the circle, when it comes to legislation. So hopefully that when we have another one of this, we must make sure we have the relevant people from Treasury here, in addition to Parliament as well. So once these are then validated, these private sector priorities, once they're validated, then they actually go to the National Treasury. And this is even done well before the National Treasury puts out a call for submission of priorities from the private sector. And then now we will then also, KEPSA will also then engage the respective line ministries on priorities that need to be included in the budget and so forth. And also, as I've said, the departmental committees in Parliament will also be engaged with similar priorities. And then after that, of course, we've seen the budget policy statement comes out. Like now we've seen that was released, was it yesterday or the day before yesterday? And we're actually expected to provide input. Unfortunately, those timelines, like this time we were told that the input needs to be in by Tuesday. which really it's something they've been looking at to give private sector barely, shall I say, 3 working days. If you take out Saturday and Sunday, is really not right. Additionally, ideally there really should be more time for this consideration and for the input to be given. And then, of course, after that, then we will then engage just to see what has been captured in the budget policy statement and what has not been captured, and then, of course, then that feeds into the finance bill that comes out, I think, around April, and then, of course, then we do go through that and see what has been, what is in the finance bill. And which was really, really controversial. And we tried to even, demonstrate what impact does that have on thin margin businesses, And I remember we were giving examples of, for example, if you are selling cement, and I think those days cement used to be like 600 or 700 shillings, and I think the margin was very thin, and you're looking at what your margins are, and then the government says, come and give me 1% of that at the top line, and you haven't even taken out your operating expenses and your payroll and everything else, your rental expenditure, and of course you're left in a negative position. So we engage in that manner, just to make sure that the policy makers actually understand the impact. That they're just not numbers that you're putting there, that we're going to increase this particular rate by 1% or by 1.5% or whatever. But what exactly does that look like on the ground when this individual is running their small hardware shop, or whether this manufacturer is running their factory, whether this dealership is running their petrol station? What exactly does that mean? Does it mean that we're going to have a number of these hardwares shut down if we're not making money? One of the things that we've recognized at KEPS, and we should all recognize, is that capital is not static. Capital is mobile, isn't it? If I'm not making money in Kenya as a business person, I'm going to move to Tanzania, I'm going to move to Uganda. And what does that mean? That means that we're having more people out on the streets without jobs. So this is really, when we talk to policymakers, we really want them to internalize that it's not just a matter of numbers, a matter of, okay, I think I'm going to collect another 200 billion or 500 billion this year. It's really, how will that impact businesses? How will that impact the lives of Kenyans? In addition to these kinds of engagement that I've just described, we also engage really at the highest levels in terms of the executive through ministerial roundtables and the President's roundtable. And this helps us to advocate for important and critical priorities that may have been missed out and which would have a positive impact to the business environment and also to government revenue. So part of the reason why I really have wanted Honorable Kimani Kuria here is that a good example was really the Finance Bill 2024. There had been so much engagement from the private sector, both at the National Treasury, at the ministerial levels, at the parliamentary levels, but really it appeared like nobody was listening. And it took also the engagement of KEPSA at one of the President's roundtable to have some of the really controversial measures dropped. But unfortunately, by that point in time, it was actually too late in terms of, like the Gen Z demonstrations and all that, because what had been building up to that date was really that policymakers and government was not listening. So one of the key things that is really important is that we really must listen to each other. Private sector is coming from a certain perspective, and they actually have views in terms of understanding what's happening on the ground, isn't it? We always say vitu kwa ground ni different, so you always know what's actually happening on the ground, and that's why we're providing this input. Additionally, at KEPSA, we also really engage with KRA and the National Treasury, and we do this regularly throughout the year. And especially with KRA, we engage with them from an administrative point of view, because we want to make the administrative process for collection of taxes actually a lot smoother for our businesses. For example, now we know that a lot of our businesses are dealing with this VAT auto-population, and it's a big challenge in terms of what invoices have been populated into your VAT return. That's due on Monday, and there's still quite a number of challenges that businesses are dealing with, and KRA then has to step up and see how do we then help our taxpayers make these payments and make this process easier. We want to pay taxes, but you must help us make this process of paying those taxes a lot easier. I was asked as well, can this process be improved? And my answer is yes, the whole legislative process can be improved. And the most important thing is what I've said, for them to be an openness in terms of listening to each other and to considering each other's points of view, right? So when we as private sector come to the policy makers to give our feedback or to give our input in terms of what we think needs to be done, we want policy makers to actually be open to listening to us and to doing something about it, right? Not listening to us and then going back to Parliament and then passing laws that appear as though we did say a word, isn't it? And so we don't want to have tone deafness. We want to listen to each other, and we also want, as private sector, what we have done as well is to actually listen to government as well and to see where government is coming from. And there are instances when certain proposals are made, for example, in terms of increases in certain rates, we've actually said, don't increase it by, 1.5%, increase it by 0.5% or increase it by 1%, right? Have a gradual increase. For example, and we've always challenged Karen, and I'm glad the chairman is here, Governor Moreithi, let's work on expansion of the tax base, right? The challenge has always been all the people who are in Gikomba, all the people who are doing their informal businesses in the market, are they paying their fair share? Some of the people in Gikomba are probably earning more than those of us who are running small businesses or those who are employed here, but are they paying their fair share of taxes? What about rental income tax? Is everybody who actually owns rental property, are they paying their taxes? And the records are there, whether it's records of ownership of the property or ownership of, from Kenya Power, metering units and all that information is there, right? So we really challenge, and we'll continue to challenge KRA in terms of that expansion of the tax base. We want to continue giving more concise examples that are backed by data, as I've explained. If you come in and say that we're going to increase, a certain tax from 1.5 to 3%, what exactly does that mean for the business person who's operating in that space? Is that going to wipe them off the market? And then in that case, then you will not have any taxes. We can already see some of the challenges that are coming up when we look at, the 6 months collections, or I don't remember the specific data, where we can see some revenue, like either VAT or pay as you earn, is starting to come down. And why is it starting to come down? Because organizations and businesses are looking at all the costs and so forth, and that will then have that impact. Of course, the elephant in the room is really always around how do we seal wastage, and how do we, because if we're to seal wastage in terms of how the tax revenue is collected, then that would mean that we don't have to have so much pressure in terms of tax collection, and which can then come back and say we can then now reduce the government bills and bonds, those rates, and maybe we can then now invite banks to start lending to the private sector, to start lending to small businesses, and to grow that space. So there are many things we can do, but for me, I look at it, the biggest priority is that we must be open to listening to each other. So I'll stop there. I think we're going to have another session where my colleague Steve Okoth will then have a discussion around what about the specific measures around these tax amendment laws. There were a number of good things in those tax amendment laws that some of them are in place. But there is also going to be definitely certain increases, especially in the indirect taxes. But we'll have that discussion. Thank you.
All right, thank you so much, Rose, for that, quite highlighting some of the issues affecting the business sector and raising very pertinent questions about what the government and the Kenya Revenue Authority are doing to ensure that the tax base is expanded so that you're not just burdening one side of the economy. She's spoken about rental income and what is the level of compliance, and also the efforts that the Kenya Revenue Authority would be making to ensure that we are getting there. You maximize on the revenue being collected while not overburdening those already paying the taxes. She's spoken about the challenges of VAT, auto population, and what the process of reviewing laws means. And we'll be having that conversation later on when you have a national tax policy, and then you have amendments coming from time to time to change a few things of what's happening. I want us to spend some time also to hear from different sectors on what the experiences have been, and this is sort of an open mic session, so whoever has an opportunity or rather has something to say about the experience with the tax system, but also the reviews that you have witnessed the past few months and years. I'll be giving you an opportunity. I want us to begin by hearing from Boniface Mwangangi, who is from the pensioners team.
Good morning, comrades. Yeah, my name is Boniface Mwangangi. I'm the Secretary General of the Association of Pension Trustees and Administrators of Kenya. Do we have persons here who are members of retirement benefit schemes? We have any? Or none? I'm happy you are not here. But for now, we have had an experience in the pensions industry on taxation, and these laws on amendment of the tax laws have brought in certain advantages to the pensions industry, and we are grateful. But the cost of democracy is eternal surveillance. These improvements have not come from zero. We have been agitating for them. They may not be sufficient, but they have brought in some happiness in the pensions industry. For example, an increase on contributions of 50% free from tax has been introduced. Now we have 30,000 shillings free of tax every month. But there is something little more which needs to be done to make that statement appear more attractive. The thing is, we have certain institutions of state who are exempt from paying tax, where their employees are members of a retirement benefit scheme of the employer. They are being charged tax as though payment to the pension scheme or contributions is a pay personal to the employee. That does not apply to other institutions which are not tax exempt. We would have loved to have a conversation on that, so that those employees in public entities, every institution should be able to apply. Then we have tax deductible limits on post-retirement medical. We have had a consideration may have to be brought forward to know whether that may be increased. But under that heading, ladies and gentlemen, we still have some questions to ask. Now we have SHA and we have Chief, where people are making contributions for treatment. Question is, these persons who are in retirement benefit schemes and are making contributions with this exemption also for their treatment, how will they be treated when they have their own method of being treated from the pension scheme, yet they are also being told to make contributions for purpose of being treated under SHA and SHIF? Probably that's a conversation still pending. But we have more concessions which have been brought forward. These are straightforward, where you have reached the prescribed age of retirement in your scheme, or you are withdrawing your benefits from the scheme because of ill health, or you have been a member of a pension scheme for 20 years, you will be paid from 27th December 2024 your pensions without being charged a tax. That to us has made a good concession, and we are happy about that consideration by those who collect taxes. But there is something more which was not expressly made, but it can be deduced from what the government has done on account of that tax. There was no mention in the amendment laws on how we should be able to deal with gratuities being transferred to the pension scheme or transferred. There is no mention on what we should do with death in service benefits. But both can be addressed. Now that there is an exemption on pension, you only need to consider two things. One, gratuity is a term of service. When it is transferred to the pension scheme, it becomes part of the benefits payable in that scheme. So then its tax regime would be applied on either you have been in the scheme for 20 years, or you are withdrawing because of ill health, or you have reached the prescribed age of retirement, in which case then gratuity having joined the scheme will also form part of the money to be paid to you without being charged a tax. There is also the case of death in service benefit. Death in service benefits is provided for under the Retirement Benefits Act, and therefore when death occurs and you have to be paid your benefits, it will join the method of taxation that is applied in the pension scheme. Probably it falls properly under withdrawal before you reach normal retirement age, for which again a tax is not payable. We are looking for more in the pensions industry, and we are happy that the committees of parliament and the legislative arm has been responsive. There are, however, two matters which are pending. They may not be related to tax, some, but we would like to mention them and then leave the stage. We have the National Social Security Fund issue pending in various pension schemes and institutions
we need to look at, because we know Africa loses quite a bit in that area. And also in terms of our own country, there's been attempts to bring down the tax expenditures. So the question is whether we were again fully understanding where those proposals were coming from. And I think as the public, as citizens, we need again to analyze the tax proposals looking at that angle, because it's informed by some of the things that are happening at the international level and the regional level. So these are not things we can avoid. But I think the greatest concern for us as the Taxpayers Association has been how we redistribute. So tax in itself, we feel Kenyans might not have a problem so much with it. Pardon me if I'm wrong. But the question is how we redistribute that tax. If you look at us saying that we want to move towards taxing the informal sector by way of expanding our tax base, the question is what benefits are the people in the informal sector getting from that tax? We can't just say we are getting roads. That is what majorly we are told, but there are roads, there are other public services. But if you look at a country where the schools haven't gotten funds, that is what our schools are saying. You look at how our health sector looks like. So I think we need to address the issues of redistribution. And linked to that, I would say also the issues of our wage bill. A significant part of the taxes that Kenya raises goes to the wage bill. But the question is how many people in that formal sector, again, is how much they are taking from the tax. And if we dig deeper, some again is the issues of the per diems and looking at that and how much we are paying our teachers, junior, secondary. So there's a lot of issues around inequality that I think we need to address as a country. Lastly, I think this has been mentioned by Chair Kepsa, is what really is public participation. So we participated in this as members of the Core Uchumi Coalition, but if you look at the document after our participation, it really does not reflect what has gone in. So I think there is deeper, we understand that probably the document that comes out of a public participation might not reflect all of the submissions we made, but even the document that is brought for the public participation should not have things that just don't make sense. Sorry to use that word. If you look at what was the motor vehicle circulation tax and issues around that, so our request is that some of the proposals that also come to the public needs to have been looked at before. There is a lot of stakeholder engagement that should have even come prior before now we do the public participation. It will then reduce the emotive where we are looking at taxation. And I think that will also help us as a country, because we know our tax to GDP really is not where it's supposed to be. So we cannot run away from the issues of tax. But the question is, can we really have better dialogue, more consensus, so that as we move towards domestically resourcing our country, it's a way that does not hurt others and ensure that, again, others are not paying their fair share of tax. So I want to leave it at that. And asante sana.
Thank you so much, Irene. She has raised important questions. Also, what we need to think about on the value for money, because once you pay tax, yes, it's like an expenditure. But what does it go to do? And if it's anything to use and to reference what that means, you may also want to take some time and look at the budget for education, 656 billion shillings, and part of that goes to the secondary schools. And you have an examination called the Kenya Certificate of Secondary Education, and you look at the results and you see nearly half of the class scored a D+ and below. What does that tell us about the value, knowing too well that you've invested resources to pay teachers, to buy books, to keep students in school by way of capitation? Those are things that we may continue to think about. So I want to now transition and here, because we'll have more views when it comes to the point of the panel discussion. I want to introduce the newest chairperson of the Kenya Revenue Authority. He is the former governor of Laikipia County. He's also a former assistant minister, industrialization. He worked very well helping businesses that time. And he has also recently been working with county governments to help them in raising revenues, the on-source revenues. He's assisted a few counties. And the last time I saw him, he was speaking truth to power. Well, 2 weeks ago or so. He'll tell us how that is going. Karibu sana, Chairman.
Thank you, Sam. Good morning, all. Good morning. Of course, Sam is quite correct that not so long ago, when we last met, so my intention is to continue speaking truth to power from inside. Now, look, ladies and gentlemen, I'm not going to pretend that I have become an expert in just the 2 weeks that I have been at KRA. Nonetheless, let me start by dealing with the issue of VAT auto population. Now, the whole idea is that when we are successful, it will make it really easy for taxpayers to deal with VAT. That's the intention. Is the process from now to there painless? Not really. As a result, we have practically every day or every second day virtual trainings on this issue. So what I would encourage taxpayers, if you have a specific issue, let me know, raise it with the Commissioner General, reach out to us so that we can respond to you and deal with the specific difficulties we may be having. We know that some clients have said the system is not working properly. And we were looking into that just yesterday. Yesterday afternoon, in checking whether really is that working properly. From what we could see, it seemed to us to be working properly. But we want to hear from taxpayers who may be having difficulties with it. For example, if you take between yesterday, we were checking at around 3:30 in the afternoon. Between yesterday 3:30 and the day before 3:30, same time, 12,235 returns had been made in those 24 hours. By yesterday, that time I'm talking about 3 p.m., the total was about 52,321 returns had been. So from where we are sitting, we think it's working, but I hear you, Chair, so please ask members to reach out to us and so that we can solve practically what the issues are. See, hata makofi jamini, I don't know. Encourage me along. Now, so as I said, I'm not going to try and pretend I've become suddenly the chief tax expert in the whole thing. So allow me to make maybe 4 points or 3 points, then respond to some of the conversation that has been ongoing real quick. So I want to start broadly at the highest practical possible way of thinking about this, which is about why do we pay tax? Why do we pay tax? And I want to suggest, you see, without tax, there is no state. I think that's really the bottom line. The state, although obviously some countries, even us, we have some investments, but the cash flows from investments are very tiny. Some nations that have resources, they get money from selling those resources. But even then, the bulk of how citizens anywhere in the world finance the state is taxation. Of course, you can go back now in the history of how democracies have evolved to, lawyers will tell you about the Magna Carta and other documents like that in medieval UK, that you can't tax us if the king, so no taxation without representation. So, tax and the whole concept of the state and how states work is one and the same. Now, I know that in Kenya recently, not just in Kenya, actually in many countries, we have chosen a path of borrowing in order to, at least in theory, accelerate what we're doing. So in Kenya, in the last 20 years, no doubt, we have borrowed quite a bit to build infrastructure. Of course, we can argue, was that really the right trajectory or not? We can argue about that. But the reality is, going back, if you look at the construction of Vision 2030, infrastructure is seen as a key enabler. And it is infrastructure of different kinds. In the old days, Rose and I and others were persuading government, for example, infrastructure in ICT, like the underground, whatever they call undersea cables and so on. We even build more infrastructure which then citizens are not using, like the national a certainty. But the questions you have raised here about how do we do it, is it fair to all? Is the burden shared equally or equitably? Maybe is the word. Those are the questions that we should and we must continuously discuss. I know that Mr. Muragori raised the question about public and private interest, and that is tax policy really for public interest. And I want to persuade him it is. Nonetheless, political discourse is about interests all the time. And I think we do well to keep that in mind, that even when we are making representations, we come to the table representing interests, and that's the way it should be. It's not that it's a bad thing. If I'm a business membership organization, I come to the table to represent the interests of the businesses who are my members. That's the way it must be. Otherwise, democracy cannot function. So it's not that interest is a bad thing, but how are interests moderated so that we are fair? The Gen Z revolt from last year, personally, it's not a government position, but personally, I take the view, like our colleague from the pensions, that eternal vigilance is what is required for democracy to function. And that citizens taking action, including direct action, is actually what is contemplated by the Constitution of Kenya. So again, there is nothing really wrong about citizens expressing themselves, It is not quite elaborated how the citizen might take that direct action. So let me come to the big issue then that both Rose and Muragori raised, which is this question of frequency of change. And I know we will go into the discussions, deep discussions about it in the panel discussions. My personal view is that the finance bill, or the need for an annual finance bill, is a historical thing. I don't personally see any technical reason why it is like that, other than the weight of history. Historically, going from 1990s backwards, from about 1990 backwards, during the time when we had price control, price adjustments were an annual thing. And the Minister for Finance came to Bunge with a briefcase. In fact, he stood out, then surrounded like this, he took nice photos, then went to Bunge and he explained how prices were going to change. From midnight to night, usually was the speech. And you could see why that was happening, because how else did you announce price changes? That's why budget making was actually a secret, and it was very guarded. Yeah, of course, so have business people. Let me not mention names, who could anticipate, is the price of beer going to go up? For example, they could keep stock so that they make a bit of so it's the weight of history. When the Katiba 2010 came about, the requirement of the Constitution is that the CS Treasury is, making certain submissions, but it's not that necessarily they are going to make that annual speech. So, is there no room, or is there room for 2-year, maybe 3-year, maybe even longer, within which not too much is changing? It is my personal view that there is, and that it is desirable, and that is what we ought. That's the debate certainly we in government should be having with ourselves, but also with you, our clients, so that that certainty and frequency of change is. And you can also see that in fact that must be some of the original thinking in the construction of various instruments. For example, the budget policy statement that has been referred to here, when you look at it, it is looking at not just today or this next financial year, it is looking at 3 years. The medium-term debt management strategy, you can see that foundational thinking is that let's think about 3 years, let's think about 5 years as the periods within which we are planning, so that we create certainty both in terms of government finances but also in the rest of the economy. So I personally associate myself with those sentiments. KRA. So let me say a couple of things about that, since that is the hat I'm wearing today. I forgot my book. I wanted to show you a book, but anyway, it's it's a very nice book. I thought I will show Rose Maura, but I also wanted to, it's a very nice book. Please look it up. From fiat tax collector to popular service agency. It's not KRA, it's what I hope KRA is going to emulate. Good morning. It's what I hope KRA is going to emulate. Who is this? This is a Swedish tax agency. So a few years ago, they, like Commissioner General of the Swedish, thought, oh look, everybody says they have done quite well, so they documented it in a book. The idea is that, why should we be an authority? I mean, authority has this notion, like we are trying to, by force, by fire. That's not really what we are about. We are a service agency, and we want to be able to project that we are a service agency. And if you look at our corporate plan, that's actually what we are saying we want to do. In doing so, what is it that, what are some of the things, changes with digitization or use of technology? And we've just been speaking here about auto population, but throughout everything we do, we want to rely more on technology. And if you look at the core values that we are aspiring to, or we are trying to live, making this process as simple as possible is at the heart of it. And we think that technology allows us the possibility of doing that. Let me turn to this issue of expanding the tax base, and Irene spoke to the question of informal, I think also the other speakers. Now, two things to say about this issue. Personally, we feel that we view informality only in the idea that is the business, for example, registered with the business registration services. But I think we should be thinking about income. Yeah? Whether the business is corporatized and whatever, but we should be thinking about income. And what you will see is that many operators, whether individual or trading as a business name or in some other way, their income is comparable to the income of those who are salaried, for example, or even way higher than those who are salaried. The question is then, shouldn't these folks also contribute to tax? I also want to make the proposition that For example, the way we trade, the way we pay, there's nothing informal about it. Today, we are all using digital payments at every level. Yeah? And there's nothing informal about that. I mean, many people in the world find our payment systems, particularly mobile payments, quite sophisticated. So I do not believe that there is anything informal about that. So fairness, if we go back to the Irene question, fairness would imply let us rely on technology so that all citizens can participate in this particular civic duty. So that's our approach to it. Rose and even others raised the issue of rental income, for example. And why is it that we are unable to get to it? A number of reasons, including breakdown in some just normal planning questions. Like, why don't we have a functioning street addressing system that allows us to identify? But technology, again, is easy to overcome those things. After all, you see that application of technology in for example, taxi hailing. And so it's quite possible to use technology so that we make it easy, we make it simple, and therefore plausible or possible for all of us to participate. We certainly agree with what the private sector is saying, that we need to reignite credit to private sector as a basis of growth so that that growth can yield tax. And we totally agree with that kind of propositions. A couple of questions raised, more than a couple, but maybe I'll only be able to deal with 2 or 3. The targets in the budget policy statement, the outcomes, what we've been collecting over time vis-a-vis the explanations. There's, without doubt, an opportunity to improve the way those targets are generated. Without doubt, there's an opportunity to do so. And certainly, it is an area of engagement that I have begun with the Treasury, that how do we ensure that the way these targets are arrived at is as realistic as possible. Now, what is the effect on KRA? Some asks. Well, of course, it is, the pressure is on us then to try and collect. That's the effect. There's a joke, I'm told, I hope that if you go to hospital, when you say blood pressure, they might ask you if you work for KRA. So I hope it doesn't. Yeah, so the pressure is on us to perform and to collect. Explanations vis-a-vis the context. I hear you that we already know or can see, all of us can see, for example, the last 3 quarters, growth has been on the decline. So if you think about the BPS target, if it is assuming 5.8% growth or 5.2% growth, yet what we are achieving is 4.8, you can already see we are going to have difficulties. So I think our colleague is also very, very correct. A number of you have spoken to the 2024 finance bill process, and I think I've responded firstly by saying it is my view that we must find a way to get to longer time horizons and not be stuck in history where you see, it used to be glamorous for the finance minister to walk out with that briefcase. But if you actually read the Constitution, there is no requirement like that. And perhaps if we move away from it, we can focus on a longer time horizon. I want to attempt, I'm not sure that I can do it justice, to deal with this question about use of taxes, inequality, and so on. I think I need to raise even the question of, like, say, per diems vis-a-vis salaries and things like that. So, now the way I want to respond to this issue is like this. Should we have better equity across the system? It's my view that we should. We must aspire to do so. You can ask a question like the differential. We ask it in private sector. Between the lowest paid person and highest paid person, what's the differential there? And should we not be doing something about it? And the broad answer, of course, is yes, we must. And you go then back to eternal vigilance, that which are the spaces where improvements are necessary in the way we run our society. And this certainly is one of them. Yeah? Historically, people have even argued, and perhaps even we as KRA have fallen prey to that argument. Arguments were made in the 60s about potential, economic potential of different corners of the Republic. And some areas were thought to be low potential. But based on what? Based on which lens? And that led to some certain mistakes. I give you one, then I sit down. You see, and I'm saying even we as KRA, we have fallen prey to that kind of thinking. And it is my expectation that in my tenure there, I'll change those things. For instance, one, northern region, because we have a regional structure, is run from Embu. How can somebody in Moyale be relating with somebody? Do you know what distance it is from Embu to go to Moyale? So is that kind of 1960s thinking that we need to change? That there is no potential there? Who tells you there is no potential? In Mandera, for example, Moyale. So for instance, Toto tea, who knows? Last year's tea exports, earnings from the tea sector, maybe 140 billion shillings, give or take. What is farm gate prices of livestock, cattle? Forget not. And of course, you think we don't have potential, and that potential is in tea, but we are expectation that that's what I shall be doing. And to the taxpayers, I'm not a daily operator, I'm a chair of board. What I do want to tell you is that my door is open, my phone number is answered, and my emails are answered. So usikonde, because that you have an issue with KRA, get in touch.